remember about a year or so, I became very viral on the internet, particularly on YouTube, because I taught you guys a news trading strategy which made a lot of people money, and it was called the straddle strategy. I even went ahead and created up to 3 different strategies. It was also the Godlove fundamental correction, it was the straddle strategy, and also the Godlove bias, directional bias. There were 3 strategies strictly for news trading, and all those strategies went viral. I think I'm going to see if I can pop the links above, or just put the links on this video description so that you can go and watch those particular videos. But I'm not going to be wasting time talking about those videos, right? So just as the Forex market is very, very dynamic, something that was working yesterday doesn't mean it's going to work today. Something that was working on 2022 or in 2022, there's no guarantee that thing is still going to be working in 2024. That's why you need to be very, very flexible to be able to make tweaks on any strategy when you know that that strategy has become obsolete. All right, that's what I'm saying. The strategy is still working, but there are a lot of modifications you need to do. Spikes are going to take you. Most of you guys who are still using buy and sell stops, I feel sorry for you guys. Spikes are going to take you out of the game. Most of you guys who are still using buy and sell stops without knowing how to do the modifications, you won't be able to make any money in the Forex market. That's why on this video, I'm going to be covering the Forex News Trading Pro. What you need to be able to do during a news event, how you can be able to trade the news in 2024 profitably. All right, and let's get into it. So before we get into it, for most of you guys who are watching me for the first time, my name is Ndemazeah Godlove. I've been trading Forex for 10 years now, and my goal on this channel is to give you tips and tricks that will help you to be able to make money in the Forex market. So if you haven't subscribed to the channel as of now, make sure you smash that subscribe button to subscribe to the channel. Let's go. Subscribe to the channel. Let's go. Perfect. So let's go. We're going to be here. We're just going to be talking about the major news events to trade. Let's start with the major news events to trade, right? So major news events to trade. Major events. Because there are some events that if you are trying to trade, you just blow your money. So here we'll obviously talk about the first one is almighty NFP. All right, NFP. So NFP just stands for non-farm payroll. All right, so non-farm payroll. So what's the meaning of non-farm payroll? Non-farm payroll just measures the total number of jobs in the United States out of the agricultural sector. All right, so they try to differentiate their jobs to measure jobs that are not in the agricultural sector, jobs like the manufacturing jobs, jobs like lawyers, like doctors. Any job out of the agricultural sector is known as a non-farm payroll job. So the data normally comes out, I think, first Friday of every month, and that's the most volatile news event in the Forex market, and the most important if you know what you are doing, and the most deadly if you don't know what you are doing. So that's number 1. Number 2, we have CPI. CPI just stands for Consumers Price Index. So it measures consumer spending in a particular economy within a particular period of time. Then number 3, we have PPI, Producers Price Index or something. It also measures the ability of, or the extent to which producers are supplying their good in the economy, whether it's negative or positive, or whether there's a weakening or a strengthening factor. Then we have number 4, which is FOMC. All right, FOMC. So FOMC is just a speak. All right, it's just a speech. Sorry, FOMC is just a speech. Don't expect to see any data. It's just I think it's something Powell, the president of the Federal Reserve of America. When he speaks, the data is called FOMC. So it's just a speech. It's just a speech but we still trade on this particular speech. I'll show you how to trade on the speech. That's also very, very tricky. Then we have number 5, we have Canadian dollar employment change. We also have number 6, we have Australian dollar and NZD employment change. All right, employment change. So AUD Australia and NZD New Zealand employment change is also very, very powerful. So these are the most powerful news events which any other news event don't attempt to trade, because there's no volatility, there's no liquidity, you just end up blowing your account. So number 1, NFP, CPI, PPI, FOMC, card employment change, AUD and NZD employment change. Now let's talk about, after seeing the news events you should be trading, Let's just say NFP is coming up. How do you trade NFP now in 2024? Remember, what I'm going to be showing you on NFP is going to apply to any other news event which I've just mentioned on this board, right? So let's take something like, let's take NFP, right? So how do you trade NFP? Remember, NFP, the affected currency is the USD. The United States dollar is the affected currency. And let's just take a hypothetical example to say, okay, the NFT or the NFP data comes out and is positive. Let's just say if it's positive, then you see a sign like this, right? And if it's negative, then obviously you see it will be red. Just as the screenshot you're seeing here, you can see the data was positive, that's why it was green, and when the data is negative, it's red. So that's how you see, that's how you easily interpret it, right? So which one should we take? Let's just take the one that the data is negative. Let's just take the negative one. Let's go here. Let's take the negative. Let's assume NFP was negative for the United States dollar. That's why on your screen, you'll be able to see the forecast and then what? And then the actual. So if the actual is less than the forecast, then it's negative for that currency. And if the actual value is more than the forecasted value, then you see green, meaning it is positive for that currency. So we've already assumed that the news came out and the forecast was less than, the actual value was less than the forecasted value. That's why we said it was negative for what? For the United States dollar. So since it is negative for the United States dollar, how is it going to affect currency pairs? Any currency pair that has USD as the first currency on that currency pair is going to go down. And any currency that has USD as the secondary or the quote currency on that pair will go up. We've already spoken about currencies on this pair and correlation, and you already understand that. So in this case, let's take an example like, let's just say bullish pairs. Bullish pairs, and then we'll talk of bearish pairs, right? Remember, we're talking in the sense that the data is negative for the United States dollar. The bullish pairs will be able to have the pairs that will go up. Any pair that has the United States dollar as the secondary currency. So we have pairs like, let's change our color. We'll have pairs like SAU USD will go up. We'll have pairs like Euro USD. We'll have pairs like Great Britain Pound USD. All right. And we also have pairs like NZD USD. So what can you find it very common with all these currency pairs? You can already see the most commonality between these is the secondary currency or the quote currency is what? The USD. The secondary or the quote currency is what? USD. The secondary or the quote currency USD and USD. So all these currency pairs that have the USD as the secondary or the quote currency will go up if the news event is negative. And on the bearish side, meaning currency pairs that are going to go down, we'll have currency pairs like USD JPY. We'll also have currencies like USD CAD, USD JPY, USD CAD, and which other currency pair again that starts with USD? I think these are the major currency pairs that start with USD. And what can you find common with these currency pairs? The first currency is what? Or the base currency is USD. The base currency is USD. So the news event always always affect the direction of the base currency. Meaning if the news was positive, you expect any currency pair that has the USD as the first currency to be going up, to be bullish. Bullish just means going up, right? And if the news was negative, it affects any currency pair that has that affected currency as the first currency. The first currency here is USD, so you expect the market to go down. That's why we're saying in this case, since NFP was negative, we expected USD JPY to also go down. Just as last NFP that just passed was the same thing. NFP was negative, and that's why you could see any currency pair that has USD plummet, and any currency pair that has USD as a secondary currency was going up, like gold. You saw what happened to gold. So this is how the news event, any news event you pick, is going to affect different currencies. Perfect. So after taking that out of the way, let's talk about how do you trade? How to enter trade? How to enter trade? All right, very, very important. I want you guys to be able to pay attention to this because this is where if you don't do it rightly, you might blow your entire account. So how do you enter into trade? That's very important. And let's still continue. We are still continuing with our NFP example, right? And we're still assuming that NFP was negative for the United States dollar. So in that case, let's just take a chart like this. Let's just take a chart like this. All right, let's take a chart. Let's change the color and do this. Let's just say this is a chart that is doing like this. And at this point in time, in South Africa, NFP used to come out at around 3 p.m., around 2:30 p.m., right? So let's just draw this line and call this line the 2:30 p.m. Because in South Africa, NFP comes out at 2:30 p.m. exact, because that's when banks are opening in the United States, right? Good. We have this at this point in time. This is exactly maybe this is about 2:50 or something, right? About 2:55 or about 2:45. Or even if you are watching at 2:30, there's no problem. I want you to sit and watch and only trade with the data, not trying to gamble yourself in. Remember, I'm talking about the way that is working in 2024. I want you to sit and watch and only trade the after effect of the news, not trying to gamble your way in with a buy or sell stop. You're gonna get spikes, you're gonna get slip to hair, you're gonna get slippage and all of that. Don't do that. It's something I've tried. It's not working in 2024. If it starts working again, I'll obviously let you guys know. So what you come is at 2:30, you just watch. What you are watching is your investing.com, the website that will help you to be able to easily see all news events and the data. The best for me that I've been using for years is investing.com. So just go on investing.com, click on calendar, and you'll be able to filter to the one that has 3 bulls, right? Filter to the one that has 3 bulls, and you'll be able to see the news events for that particular day. Just put your eyes on investing.com. That's it. Investing.com will even convert it to your time zone. So you're just watching. You have this side by side. You have your chart open on one side, and you have investing.com open, or maybe it can even be on your phone, and you're just watching and shaking and maybe drinking your Coke, or maybe playing your game. You're just watching, and then boom, it's 2:30. The news is out. The first thing I want you to look, the first thing you need to have very good internet connection, meaning there should be no latency. The first thing I want you to keep refreshing is investing.com. You need to keep refreshing investing.com until the data, because the data used to take like a few seconds to reflect on investing.com. As soon as you see the data on investing.com, you see something like this. You see something like the actual forecast, and then previous, right? So taking, for example, it will just be like this. This is how the table on investing.com is going to be, or any news event site. It's going to look exactly like this, right? Let's just take something like NFP. NFP, we had something, maybe it was like 100. The previous was like, let's just say it was plus 100. They'll put it in green because it was plus. So plus 180K, meaning 180,000 jobs were created the previous month. And then this month, based on what is happening in the economy, maybe Joe Biden has quit as a president, or maybe Donald Trump was almost shot on the ear, or whatsoever, based on things that are happening, the economic analysts, they are forecasting that we are seeing that this thing is going to be bad for the economy. We are seeing that it's going to be bad for the economy, and they are forecasting what? They are forecasting 160 jobs. So let me use a different color. So let's just say they are forecasting 100. This color will declare 160 jobs, all right? 160K. Can you see? So the focus value becomes the one we are paying attention now, because they are forecasting 160. Our benchmark is 160 at this point. So if the news come out and the news is actually 150, this will be now 100, let's just say 150, right? K. So you can see 150K is less than what they forecasted, all right? It's less than the forecasted amount, which was 160, meaning this one will be red. It will be negative for the United States dollar. That's the same thing that happens for NFP. If the value comes out to be now 170, you have now what? Plus 170K. Because this 170K is more than 160. So the data is more than what the economic analysts forecasted. So in that way, it's going to be positive for the United States dollar. So last NFP was negative. So let's not confuse, it was negative. Let's just say it was negative 150. So it was negative for the United States dollar. And how do you trade if the data is negative? All right. At 2:30, remember I said you should keep refreshing your investing.com app. Keep refreshing your investing.com app. And as soon as this data here appear, boom, just look if it's red or negative, if it's red or green. That's it. Just be looking to see if the data is red or green. If it's just a neutral color, you shouldn't do anything that day because it means the data is the same as what the economic analysts forecasted. That used to be very common with something like interest rate. You see, they'll forecast that the interest rate is going to be maybe 2.5%, and then the actual will come out 2.5%. Don't try to trade at that point because you just see something like this. You just see spikes in the market like this, triggering all your positions, and you're gone. Don't try. So the data here has to either be positive or negative, not neutral. All right. So if it's negative, what will happen? You see the market, in most cases, first scenario, you see the market will do this. You see the market will do this against you, and then boom, 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 go up, and then again come down to what? To the trigger point. This is always the wave. 90% of the time, this is always the wave, where the news will create that spike. All right, because they know that this is called a spike. All of this is just called a spike, right? Because they know many people, since they already see that the data is negative, it's negative for the United States dollar. Or remember, we are talking, okay, this is for gold, because remember, this is SAU USD, right? And since the USD is the secondary currency pair, we expect this chart to go up. So since they already know that many people who are investing in gold will be buying gold immediately, what do? They'll create that spike in the opposite direction to take many people, to trigger stop losses of hundreds upon hundreds or thousands of people. Immediately you see after this spike, boom, what will happen? You see the market will then take the original direction. The same thing you can see on this chart. This was a clear spike. All of this from year to year was a clear spike. And then after that, you can see the market went in the original direction, which was supposed to be bullish for SAU USD. You see. So when do you get into this trade? If the market opens or if the news opens and you are fast enough to see the spike, you get in somewhere, you get in. Remember, the spike is going to push against you. All right. In that case, you're not trading against the trend. Remember, your idea, your confidence is already backed by fundamental. It's going to go up. So don't worry yourself. This spike in the opposite direction, you just smiling and say, bro, I'm not more a beginner. I already know what you guys are trying to do. So don't worry. And I don't want you to go in full margin. Full margin means you just go in with just a small level where the market just goes against you with 10 pips. You already, the whole account is blown. No, give the market room to breathe. Okay, don't suffocate your trade. All right, give the market room to breathe. So you get in somewhere here and always give like a 50 pip stop loss distance, and in most cases, immediately you get in, you just see the market boom push in. Within 5 minutes, 10 minutes, you've already made 1:5 of your account and you're out for that day. That's the first scenario on when to get in. Okay, so if that's the first scenario, right? You get in on the spike. Now, what if there's no spike? In some cases, the market just used to open and you just see the market let's just say the news is supposed to open here and boom, you just see something like this, the market going up. So where do you enter at this point in time? Remember, this is 2:30, right? Or whatsoever time which is going to be in your time. So at this point in time, you only enter where the market retraces and give you another, maybe it can be a double bottom or something, and give you another bullish reversal signal. That's where you get in. And 80% of the time, the bullish signal used to be around the same entry point where the news was released. That's why last year I came out with the Godlove correction of strategy, where you just trade the correction, all right? Because in most cases, what goes up in Forex comes down, and what goes down comes up. It's the same thing, right? So in most cases, that reversal signal will be around the same entry point where the news was released, and that's where you get in. And you get in here with confidence, stop loss, maybe always give the market room to breathe. It's news, bro. It's news. Don't suffocate your trade. Don't just get in here and the stop loss is here because you're watching your ICT and they're talking about fair value gap. You need to put it below the recent swing, bro. You're going to be triggered out. The market will just do the poop, trigger you out, and continue going as if nothing happened. Give your trade room to breathe because it's news. We are trading the news. If it was our normal technical strategies, I would have been telling you, okay, just enter here, put it. No, this is news we are trading now. We need to be real, right? In most cases, you see the market will continue now going in your direction and you're already out of the trade. That's how you trade the news in 2024. When you guys see these small screenshots where I used to put $500, flip them to $2,000 or so, all of that, this is what I do. In most cases, if I enter somewhere here, let's just say I have a $500 account and I just come here and I enter. As soon as the market push somewhere here, poop, 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 I add again about 3 or 4 positions. I wait the market to breathe in again somewhere here, poop, 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 poop. You just see, I keep adding until maybe if I see that this area here, this high here is about to be clear, I get out of the trade. You see, $500 account is already standing on $3,000. I didn't go in full margin. I just went in with proper risk management and knowing exactly what I was doing. And I could only add to my winning position, not adding to my losing positions. All right. So let's go over to my sitting office, and I'll be able to show you guys more examples. These same examples on my computer. The timing of this video was very, very perfect because at the moment I'm recording this video now, today was CPI. Today, the 11th of September 2024 was CPI. And CPI is just one of the fundamentals I show you guys on the in the digital room, right? And the same thing I was explaining is the same thing that has just happened, and I'm going to be showing you guys. Meaning, if you would have practiced the same thing I showed you guys in the digital room on this CPI, you would have already been sitting on maybe like $10,000, $20,000, depending on the account size you have, or you would have already been sitting on a risk to reward of about 1:5. Meaning, if you are risking $100, you'll be sitting on about 500. 1,000, you'll be sitting on about $5,000, and that's exactly what I'm going to show you guys. Come to my screen. Let's see this. Let's do this on Trading View so that you guys can easily understand. Right? I'm just going to take gold. You guys already know. See, you can just see Great Britain pound USD. Let's pick gold. This is gold right here. This is gold 15 minutes. Let's drop it to the 5 minute, right? So that you guys can see very well. This is the 5 minute on gold. And if I can just zoom this out, this line, this candlestick you are seeing here, this is 230. And if you can quickly go on investing.com, this is when we have the news event. Let's even start from here. The news event was right here at 230. And what was the value? So long, just check, was it green or red? If you can see it on green, it means it was positive for the United States dollar. And we already did the video before coming to this office that if it's positive for the United States dollar, what should you expect? Any currency pair that starts with the United States dollar as the first currency in the currency pair, you should expect it to go up, like USD JPY. And any currency pair that has USD as the secondary or the quote currency on the currency pair, what should you expect? You should expect it to go down. Perfect. So we've already started here. We've confirmed that the news was positive for the United States dollar. So we already know what to expect on gold. Come with me. Let's go on the chart. This was gold. So at this point in time, you have been sitting here and waiting. This was the moment where the news was released. And look at what happened. All right. Look, the news was released somewhere here. All right. And we had this spike which goes up right to this level. Can you see? The same thing I explained in that room, because this spike is just to trigger people's stop losses, just to trigger retail traders out of the game before the big boys want to come into, before the big boys like us who know what they are doing come into the game. Can you see this spike? And what did I explain? Immediately the news come out, you just refreshing your investing.com. You just refreshing your investing.com to confirm. So long as you see blue, boom, you just come. This would have been within the first minute. You just come, even if the market, let's quickly, this is raw 05. Let's quickly go back to Trading View. So you can see this spike. So by the time you come back to your Trading View or your MetaTrader 5, the market would have been somewhere. You would have instead be going in the opposite direction. When you know very well, I've already seen it, it's blue or it's green for the United States dollar, meaning it's positive, and I should expect gold to go down. So you just come here, boom. As soon as you see the spike in the opposite direction, this is where you would have entered this trade. Let's go on a short. You would have entered a short position right here. As soon as the market is pushing up, you can enter any point, even if it's still pushing and going up. Enter a sell. You already know the direction the fundamental is going to go. Enter a sell. Don't be scared. Don't be scared. The market is going to follow the fundamentals. All right. Everything that happens in the Forex market revolves around fundamental geopolitical events. So don't worry. You are looking for your sell. So let's just assume I enter somewhere here, right? Remember, I said you should give yourself room for the market to breathe. Give the market room to breathe. So if I enter somewhere here, I'll know, okay, I need to risk about 50 to 60 pips. So let's just say I'm risking 50 pips, right? 50 pips, it means my stop loss is going to be here. And I'm going for a risk to reward of 1:4. 1:4 is going to be like 200 pips. So let's continue going down until we see a risk to reward of 1:4. 1:4. Can you see? It would have already been voila. The market is already there. That's it right there. So if I go like this, 1:4, that's it, 1:4. Would have already been out of the trade. If I extrapolate this very well, you can see would have already been out of the trade by now. Meaning if you were risking $1,000, you would have already made cool 4,000. 10,000, you would have already made cool $40,000, and you're out of the market. Can you see? The same thing I explained. Go back and watch the same thing I explained in the digital room. You're just coming here, you already know the direction the market is going to take. You come here, even if the market is spiking in the opposite direction, you're just smiling. You're looking for the way, or you're looking for a way to enter in the news direction. Full stop. You're only looking for a way to enter in the news direction. Go back and do back testing all the NFP, CPI, PPI, FOMC, Canadian dollar, AUD, and NZD employment change. Go back and backtest all that data using the same strategy, and you'll be able to understand what I'm saying. All right. So now let's take another scenario. Let's just assume the news came out, and instead of us having this spike, we instead have something like this, right? Let's just say the news came out, and from here, boom, it just started going down. So what would have expected the market to give us a sell signal like this, or maybe give us a sell signal right to this point and then shoot down, because this is the same point in the news. Remember, I used to always call this the news release point or the news release zone. So long as the market push back, that's like a correction. So long as the market is corrected back to that particular zone, would have been looking to enter somewhere here. Or even if you have a sell signal like this and you're entering somewhere here, you need to bear at the back of your mind that your stop loss needs to be right up here. So it would just be better if you wait for the market to push a little bit closer to the point, to the original news release point, before you can attempt getting into the trade. Because you can see, if I've gotten there, boom, go again for a risk to reward, or 1:2, 1:3, 1:4, even 1:5. If you have a good trailing strategy, you can even go for a risk to reward of 1:5, and in most cases, you win. Why we need to go far? This is a typical example. Today was CPI. This is a typical example. You guys would have made a lot of money. Go back and backtest, guys. Backtest this strategy on your demo accounts. Backtest it on your test account. Let me know your thoughts on the comment section on what you think. Any question regarding this particular news trading strategy, which I am currently using now, because this is a strategy I'm currently using now. Like I said, for the strategy, there's a lot of slippage now in the market, and the market is very unstable. But as flexible as I am, once I already see a strategy that needs tweaks or needs to be changed from here and there, I'm very quick. You can already see I've found another one again, which is already working. People will go poor because they already find something that is working, and they are not flexible enough to easily make changes if that thing is not more working. The strategy is not working now. As I say, if you are still going to put your buy and sell stop, bro, I feel pity for you, because you're going to be blown out. You're going to be chowed, right? The buy and sell stop strategy is not working as of now. If it change in the future and start working again, I'll let you guys know. Let me know your thoughts on the comment section, guys. And as always, if you want me to mentor you one-on-one, if you want a one-on-one session with me where I actually guide you on the path of Forex trading from A to Z, check the link on Godlove University. And if you also want to enroll in my Forex course where I teach people from A to Z on how to make money in the Forex market, also check the links on the video description. Patrex Pro, which is the most viral and the most profitable Forex robot, is also on the link, is also on the video description. And if you want to use my recommended brokers that will allow you to trade like this, or my recommended pro firms, just check the links on the video description. And as always, you need to be in my free Telegram community. So if you haven't joined that community, also check the link below to join my free Telegram community. Check out this video to be able to watch a video I made about fundamentals, which still works to today. Then check out this fundamental playlist to watch other fundamental videos. Click here to subscribe to the channel if you haven't done so. And I'll see you guys on these other videos. Peace.